done some research on offshore bank accounts as an American, chances are you have come across a variety of confusing terms and abbreviations like FATCA, FBAR, AEOI, or CRS. In this video, I want to shed some light on the laws surrounding cross-border banking relationships. We explain what the current rules are and what you need to know when moving money offshore. However, before we start, please note that we are not tax professionals. This video is just for educational purposes, and if you need specific tax advice for your personal situation, you should definitely consult with your tax attorney. The Foreign Account Tax Compliance Act, or FATCA, is a US law that took effect in 2010. Switzerland agreed to it in 2012, and it started to take effect here in 2014. It requires foreign financial institutions, such as Swiss banks, to report US-connected people, so people who hold a US passport or a green card, to the US Department of Treasury. FATCA also requires US-connected people to report their offshore bank accounts to the Internal Revenue Service, or IRS. You can do this on Form 8938. This requirement is in addition to the older requirement to report to the Financial Crimes Enforcement Network, FinCEN, on Form 114. This latter requirement is also called Foreign Bank Account Reporting, or FBAR. While FATCA was initially implemented to fight international tax evasion, it also applies to several million dual citizens, expats, and accidental Americans, making it hard for them to open bank accounts in their country of residence. This law also has implications for people who are not US-connected people, but have US family members or business partners. FATCA is used to locate US persons and to locate and store information, including total asset value and social security number. The law focuses on assets exceeding $50,000 US and does not focus on income. It also does not include a provision imposing a tax. In the law, financial institutions like offshore banks would report the information that is required to the IRS. US-connected people are required to self-report their assets, and the information received by offshore financial institutions like banks are used to cross-check whether a US taxpayer has correctly self-reported their assets on an annual basis. If money has not been self-reported, this can lead to rather large penalties. The automatic exchange of information, also known as AEOI, is an international standard aimed at creating transparency in terms of assets held outside the country of residence. The automatic exchange of information was created for tax matters, and over 100 countries had agreed to adhere to the standard. Switzerland is one of those countries. The standard was introduced by the Organization for Economic Cooperation and Development. Plenty of governments are participating and will pass on information to other countries concerning the earnings and assets held by taxpayers. The goal is again to prevent international tax evasion. One information standard of the AEOI is the Common Reporting Standard, or CRS. The idea of the CRS was based on FATCA. The first reporting started in 2017, which information is exchanged between participating countries is detailed and discussed at length. In summary, it consists of the name, address, taxpayer identification number, and date, as well as place of birth of each reportable person. Additionally, the account number, name, and identifying number of the reporting financial institution will be declared, as well as the account balance at the end of the calendar year. Lastly, also capital gains tax depending on the type of the account. Next to international diversification and an added layer of asset protection, privacy still ranks very high for people looking to move money offshore. So is this benefit now all gone with those new regulations? No, not entirely. Secrecy in regards to tax evasion and towards the government is definitely gone. However, there is still a lot to say about privacy. Your wealth, spending habits, and almost every other detail of your financial life is under scrutiny in the US. The US is one of the very few nations where it is still possible for banks and other financial services to disclose information about your accounts without permission and without probable cause of wrongdoing. There are armies of information brokers which advertise their ability to uncover assets in search of lucrative victims of frivolous lawsuits. They will definitely not be able to pry any information out of an offshore bank account. I hope today's video was helpful to you, and I very much invite you to subscribe to our channel if you're interested in learning more about all topics relating to wealth management and offshore banking.